Welcome, welcome. Today is Friday, August 1st, and it is a little bit after market. The futures market is closed. It's 5:21 p.m. Eastern Standard Time. Here's a little disclaimer. You can lose all your money. You can lose even more than all of your money. And today was a great day to show you that you can lose money. So let's just get into it on assignment of a put that one can sell. So let's take a look over here. Let's look over here. All right. As you know, or if you've watched some of the other videos, you'll know that I like to take on a little bit more risk. I like to do these triple levered ETFs. And this one is UPRO. This one follows the S&P 500. So this one is down about 5%. So SPY should be down about 1.6% maybe. Yep, there we go. SPY is down 1.6%, and so UPRO should be down about 5, which is what we just showed. Okay, why are we loading? Come on, let's go back to UPRO. So what happened here with UPRO is I wanted to own shares and I wanted to buy them at a much cheaper price than what they were trading at. So in fact, if I take a look over here, what do we have? I actually sold this UPRO put, and you can tell that I'm having a bad year. I'm down a little bit. Okay, so yes, you can lose. So what happened here is I sold a 95 strike. It was a put at a delta of 25%, meaning I had a 25% chance of owning these shares. I was happy with that. And guess what? It happened. Tomorrow I will get assigned these shares. All right. They're so deep in the money. All righty. This was an insurance policy. At the time, the price was not even at $95. So what did I do? I said, listen, I will sell this put to someone. I will take their shares off their hands. That person paid me 82 cents for this opportunity. And guess what? That person is randomly going to give me, it's based on random assignment. Someone is going to give me 100 shares tomorrow, all right, at $95. Why? Because I committed to this. And so now, could I have bought it back? Yeah, I could have bought it back, but I really just didn't want to. Just give me the shares. What am I going to do about that next week? What am I going to do? Am I going to cry about it? What am I going to do? Now that I own these shares, now that I know I'm going to get these shares tomorrow, what am I going to do about that? So I'm going to go out till next week. And guess what? My cost basis is now $95 minus this 82 cents per share. So guess what? My cost basis is really $94.18. So here I'm going to go for next week on Monday. I will go ahead and on Monday, I will sell this 94 call. It has a 39 delta, has a 39% chance of going back up to $94. If it does, and it goes through by the end of the week, fine. Take the shares that I bought at $95. Now you're saying to yourself, wait, Yasser, what are you doing? You got your shares at $95. You're willing to hand them over at $94? That's a loss of $1. You're absolutely right. That is a loss of $1. Why am I doing it? Well, because A, I've already made 82 cents for every share. Okay. And if I hand them over for $94, well, okay, I lost $1 there. I gained 82 cents here. I only have 18 cents to make up. Well, guess what? If I sell this right at the bid, the markets are closed. So now it's going to be a little bit, these spreads are going to be wide. This bid and ask, the difference between the bid and ask, they're going to be a little wonky in some cases. And so here at 94, well, take a look. I could try to get the mid price or something, but I'm going to sell them for at least $1, hopefully on Monday. And that will bring my cost basis down to $93.18. So if it doesn't go through 94 the following week, what am I going to do? The following week, I will sell, let's say, a 93 call for maybe about another dollar or whatever it happens to be at. All I'm looking to do is just start reducing my cost basis. Now, maybe I get a little greedy. Maybe I don't sell any calls. Oh, that's one thing that I could do as well. But for now, I'm saying to myself, it's August, still the summer. I'm not sure what's going to happen. Maybe the A team is away from the desk. They're waiting until after Labor Day to get back to their trading desks. I have no idea. All I know right now is I am going to look to sell this 94 for next week. And if I just click on it, obviously I can't do anything right now. I'll try to get it for maybe $1.70, maybe $1.75. Hopefully, maybe we can hope for a bounce. And if I could do that, well, I won't be able to do that now because I still have yet to get the shares. This is a cash account that I'm trading, not a margin account. Um, and yeah, it says illegal because I have yet to get assigned those 100 shares at $95. Once I do get those shares, then I will look to sell some kind of calls against them and and then just collect that premium by the end of the week and then further reduce my cost basis. The more I keep reducing my cost basis, the happier I'm going to be. And at the end, what am I going to do? Eventually, ultimately, if I keep doing this over and over and over again, my cost basis will eventually become zero. And then I won't care about where I sell calls at. Right? Hopefully you learned something today. And if you have any questions, you can always simply just write something down in the comments below. If you enjoyed this video, just hit the like button or subscribe or both. That really helps out a lot. And enjoy the weekend and happy trading for you next week.